How does Islamic lease-to-own work? Imagine being able to use a car or a house today and own it tomorrow, all while following Islamic rules. That's what lease-to-own in Islamic finance is all about. Let's break it down step by step. First, the process starts with the Islamic bank or financier buying the asset, like a home or a vehicle, from a supplier. The bank then becomes the owner of the asset during the lease period. This is important because Islamic finance requires the financier to hold ownership before leasing it out. Next, the bank and the customer sign a lease agreement called Ijara bit tamlik, which means lease ending with ownership. The contract clearly states how much the customer will pay each month, how long the lease lasts, and what the customer can do with the asset. These terms must be clear and free of any ambiguity. During the lease, the customer pays rental installments instead of interest. These payments are structured so that the bank earns income through rent, not interest, which is not allowed in Islamic finance. The rental amount is usually fixed or gradually increases over time, but it always stays within Sharia-compliant limits. The bank often remains responsible for major maintenance and liabilities that come with owning the asset. The customer, however, is responsible for day-to-day care, like keeping the property in good condition or insuring it. Sometimes, the lease agreement includes a promise or option for the customer to buy the asset at the end of the lease period. This could be a final payment or a transfer of ownership without extra charges. The lease period can vary, but it typically lasts between 5 to 25 years for homes. The monthly rent might be based on the asset's value, which could be, for example, $100,000 for a house. The customer might pay around 1% of that value each month, so about $1,000. Over time, as they make these payments, they build up ownership rights. When the lease ends, the customer usually makes a final payment or fulfills the agreed-upon conditions, and ownership is transferred to them. They then become the legal owner, with full rights and responsibilities. This method offers a halal alternative to traditional mortgages because it avoids interest and links the financing directly to a real asset. In summary, Islamic lease-to-own lets customers use assets while paying rent, with the goal of owning it eventually. The process is transparent, fair, and follows Islamic principles by avoiding interest and sharing risks between the bank and the customer.